In the high-stakes world of AI, there's one name that dominates all the headlines, right? But what if I told you there's another, quieter, giant that's just as crucial to the future of artificial intelligence? Today, we're pulling back the curtain on Broadcom, ticker AVGO, and we're going to explore why this overlooked powerhouse might just be the most important AI stock you're not watching.
Look, when it comes to AI chips, NVIDIA gets all the glory, and for good reason. But the AI revolution, it's so much more than just GPUs. It's the entire ecosystem, the whole shebang of hardware and software that makes it all work. And that, my friends, is where Broadcom comes in. They're the ones quietly building the essential and often invisible backbone of the entire AI world.
And right now, the stakes could not be higher. Broadcom is a true tech titan, no joke, with a market cap that puts it right up there with the biggest names in the business. But the stock itself is at a critical fork in the road, and the company's massive earnings report on March 4th, well, that's the catalyst that could send it soaring or send it tumbling down.
All right, before we dive into the nitty-gritty, you know the drill. This is all for educational purposes. It is absolutely not financial advice. We're here to break down the data and give you our take, but you've always got to do your own research. And hey, since we do these deep dives all the time, let us know in the comments what stock you want us to analyze next.
So what's Broadcom's secret sauce? What really makes them tick? Well, it all comes down to their unique dual-engine business model. This is what really sets them apart and makes them such a force to be reckoned with in this whole AI space.
Now check this out. Broadcom isn't just a chip maker. You might think that, but that's only about half the story. Well, 58% to be exact. That part includes the custom AI chips that power some of the biggest names out there. We're talking Google and Meta. But here's the kicker. The other 42% comes from infrastructure software, and that part got a huge shot in the arm from their recent VMware acquisition. That's the dual engine in action. They combine that cutting-edge hardware with essential software, creating this sticky ecosystem that's just incredibly difficult for customers to leave.
All right, let's pop the hood and look at the financial engine driving this company. Because let me tell you, from a fundamental standpoint, the story here is incredibly compelling. 65%. This is the number that should have every single investor paying close attention. Broadcom's AI-related chip revenue grew by a staggering 65% in the last year. That's not just impressive, that's proof that their strategy of focusing on custom AI chips for the biggest players in tech is paying off big time.
And all that growth, it translates into a mountain of cash. Last year, Broadcom cranked out nearly $27 billion in free cash flow. It's basically the cash left over after running the business. This company is an absolute cash machine, generating 42 cents of pure cash for every single dollar of revenue. Just incredible.
And here's what might be the most crucial point of all. That growth is basically locked in. The company is sitting on a $73 billion AI-related backlog. That means they have a crystal clear view of their revenue for the next 18 months. In an industry that moves this fast, that kind of visibility is a massive, massive advantage.
So let's just quickly scan the dashboard here. We're seeing record revenue, which is awesome. Their core profitability margin is a stellar 67%, and their forward PE ratio, pretty reasonable for a company growing this fast. Now, you're probably looking at that debt-to-equity ratio and raising an eyebrow. And yeah, it's a bit high because of that VMware deal. But with the amount of cash they're printing, they've already chopped that ratio in half in just 1 year. All in all, this is a very, very healthy balance sheet.
And hey, don't just take my word for it. Wall Street analysts are overwhelmingly bullish on this thing. We're talking a strong buy consensus. The average price target from these folks implies over 40% upside from where the stock is today. That is a powerful vote of confidence from the pros.
So with such a fantastic fundamental picture, why are we calling this a crossroads? Well, this is where the story takes a sharp turn. Let's get into the technicals and see why the picture is, well, a lot more conflicted.
Okay, so this is where things get really interesting. You've got a classic heavyweight fight brewing between the bulls and the bears. In one corner, the bears are pointing out that the stock's trading below its key short-term trend lines, the 20 and 50-day moving averages. But in the other corner, the bulls are looking at the bigger picture. The stock is testing a super-critical long-term support level, the 200-day moving average, and other indicators are flashing oversold. It's a true standoff, and you guessed it, that upcoming earnings report is probably going to be the knockout punch for one side. And these numbers right here, these are the battle lines. Think of them as the trenches. That 295 to 305 zone is the floor. If it breaks, the bears win. On the flip side, the bulls need to get back above that 345 to 352 area to regain control. everything is hinging on these levels after the earnings drop.
Hey, by the way, if you're finding this breakdown valuable, do me a quick favor and just smash that like button and subscribe. It honestly helps us a ton and lets us keep making deep dive analyses like this one.
And I know we're covering a lot of ground here, so if you want to go even deeper, the full detailed research report that this whole thing is based on is available for you to download. The link is right there for you in the description.
All right, let's get actionable. We've laid out the fundamentals, we've laid out the technicals. So how could someone actually approach this event? Let's walk through a potential trade plan.
First things first, and I have to be crystal clear about this, a serious warning. Trading around an earnings report is a high-risk, what we call a binary event. That means the stock can gap way up or way down in the blink of an eye. So please, do not even think about trading this without a clear, disciplined plan in place.
The name of the game for this potential setup is one word: patience. We are not guessing, we are not gambling on the earnings call itself. This plan waits for the dust to settle. The entry only comes after the report, and only if the market confirms a positive reaction. You're looking at an entry between 330 and 345, with a hard stop loss just below that critical support at 295. From there, you target those key resistance levels on the way up.
And think of this like a pilot's pre-flight checklist. It's all about discipline. Step 1. Prepare right now by setting your alerts. Step 2. Wait. Let the earnings chaos pass. Step 3. Confirm. You only enter if the move is real and holds up. And Step 4. Manage. Use a non-negotiable stop loss and take profits at your targets. Discipline is everything.
Okay, let's bring it all home. Time to land the plane and talk about the final verdict and the key risks to keep in mind.
Here's the whole story on one card. Fundamentally, Broadcom is an absolute beast. We're scoring it an 8.5 out of 10. Technically, it's a total coin flip, a 5 out of 10. And that brings us to our final recommendation, a conditional buy. And that condition is simple, but it is non-negotiable. We need a confirmed positive catalyst from that March 4th earnings report.
So that leaves us with the million-dollar question. Will this AI earnings catalyst be the rocket fuel Broadcom needs to break the technical stalemate and push back to new all-time highs? I want to know what you think. Let me know your thoughts in the comments, and while you're down there, tell us what stock you want us to break down next.
For more real-time analysis and to keep the conversation going, be sure to come join our communities on Twitter, Telegram, and Reddit. All the links for those are down in the description. And seriously, don't forget to download that full report for all the nitty-gritty details. And as always, remember to do your own research. This has been for educational purposes only. Thanks for hanging out with me today.